So today we're going to do part two of my mentoring with a trader, and the topic that we're going to cover today, we're going to talk about second chance and trading IPO. Both are kind of things that I really put a focus in the last, I think, year or two.
Yeah. Do you retry your entry when you are stopped out and the price moves again to the ending point?
Definitely. If you can go to my YouTube channel, there was a lecture I do, and I'm one of the favorite of second chance. I don't have to be right on the first time, really. Sometimes on the second time, I told you. But what I learned, and I did it in the last 2 years, when I'm looking for candidates, maybe a list of stocks for the opening and for the rest of the beginning, I'm putting them on charts, and I'm still watching them because I can miss, but I'm still watching them because if I thought they are a good candidate, I will watch, because a lot of time, the second chance can be amazing. And usually what most of the people do is because they just, lost in the first, they just take it away and, move to different stocks, which is not the right things to do. Because if you actually did a research and pick yourself, like, let's say, a 6-5 stock that are interested, it doesn't mean that because you lost in one, you can go back. And it's happened so many times, really so many times. Usually people don't see it because after they first lost, they are pissed off and they just move away. But no, it's a mental thing. I know. I used to, renew my stocks every 20-30 minutes, new stocks. But believe me, if you find, and probably you have a good experience, so you can find a good stocks and you just follow them. Again, if they change their, the trend and nothing happened, I'm not going to stick forever. But if still you can see, volume coming, and you see that they are in the right sector, and you see that the market support them, definitely, be patient. And the more sometimes you trade in one stock, you are familiar with the level, you're familiar with the behavior, and it's going to be maybe sometimes easier to track, the right, because I love to see, for example, a stock that is coming. And this week I had a nice celebration. Why? With STX, because I like to do also swing trading, and I post my swing also on my channel. And this is a trade that I did. I posted like 2 weeks ago, and I'm still there on STX. It was a swing above 90. See what happened there. It's like amazing. And when the stocks actually, you see, broke the high, all-time high, it's the biggest volume ever. Now, when you know this, it's a crime not to put it on the daily, on the intraday, and see how many opportunities you have in this stock. So definitely this stock need to be on your chart, and every opportunity that you can see, for example, in this day, see this stock, you can see I did one trade around here. So I did it once around here, but even if you didn't catch it, just watch it. You see, there was a retracement towards the VWAP, and then the stock from here got a good support, got to the high, new high, and if you're going to see it, as you mentioned, in different time frame, just beautiful. You can sometimes even go to 30 minutes. See, and this is the last part when I was telling you hard stop, actually can raise it along the low. So you see, when you have a way of trading, it's make it easy for you, to follow and, do this. Yeah, go ahead. I can talk 24/7, so I don't want to.
How much do you focus on the daily chart for your intraday?
It's part of the, I have kind of not a quick, but I have a checklist. Like, for example, if it's the beginning of the day, or if it's through the day, you know, when I'm doing a screener and I'm finding more stocks, you know, to trade, I always like to do kind of checklist. I'm not just, it look a nice reverse. I want to know what's going on. Like, for example, I will go to the daily chart to see the main trend, to see, for example, if I'm going to break a certain level here, where is the daily resistance next? Because I want to go into a trade that I have a good risk reward. I'm not going to take a reversal that looks amazing when I see that, for example, the potential is maybe 1-to-1. 1-to-1, it's not for me. I'm not aiming to take trades that I can get few cents and say, hey, I'm green. I want to push the edge. I want to look for trades that I can actually get a good risk reward, that actually can give me a great trade. I don't want to compromise, and sometimes I don't have problem, you know, to wait. Sometimes I can trade more, but definitely this is kind of the thing that you mentioned: different time frame, daily, trend, and I don't have problem to go against the trend. You know, sometimes I can do at least the beginning of the day, if the stock is weak, although maybe the SPY is high, and I see the weakness from, I'm trying to remember a stock that I did this week. I was in this blur inside that I actually short it immediately, and after that it's turned direction and moved to the other side, but I care less what he's doing after. You know, if I see a weakness and I see the levels again of the pre-market and the stocks broke it, definitely I will short it. Yeah, quick short. Again, if the market is strong, maybe I will take the partial, you know, instead of half at the beginning of the day, I like to take 3/4, you know, because it's a momentum and momentum can change. So I can be maybe 2 minutes in a trade, but I can get as much as I can. I can lower my stop, but you have to have a set of rules. What I'm saying is, for every type of trading, you need a set of rules. You just can't float. You just can't. It's very important, you know, before you click, to understand exactly where is your clear entry, where is your stop if it's not working, where is the levels of the resistance on the chart. So everything needs to be very clear. So when you click, you're going to see that less tension, because a lot of things, as much as you can, are in control. Okay, what's not controlled, you have a stop, and that's a different thing. I want to introduce my mentoring one-on-one. I'm doing this mentoring for a few years. 90%, 90 something percent is usually one-one. Sometimes I did it with couples. And the purpose of this, it's live with the technical. We are dealing with the risk management. We are trading between session. We actually take notes in order to be better. And the purpose that we are doing it one-to-one in order to get you to the next phase. Make sense?
Yeah. What else do you have on your checklist to be selective?
Let's say if it's the beginning of the day, definitely I would like to see a good volume. Good volume for me, you know, couple of hundreds, percentage, at least 3-4% at least. I want to see something that is unique, because if I want to trade something, let's say at the open, I want to see that it was posted on the news already on the pre-market. So, you know, institutional or the big, retail traders already trade it. So I can see clear levels, I can see clear points, and actually can plan my trades, really. So automatically, let's say if it's a short, if it's breaking immediately the low of the pre-market, and I like to watch the volume, and I like to see, for example, the volume, and what happened as the open. Sometimes you can see that it's triple the volume immediately. So it's give you a sense of, okay, Amir, you're not alone. The other people are interested, and it's very important. And it's very important to, I know that some people like to do one-to-one. This is also, it's not something that I force somebody to do, but you need to have your understanding of how you are, for example, taking profits, half. When are you taking 3/4? When are you, let the stocks, instead of getting out immediately, give it a little bit retracement and then maybe add. How much do you add, in order not to jeopardize? Everything need to be very, very clear. You have to do kind of a rules and something that actually will help you to follow. So you're not going to improvise because there's no place to improvise in the trading, really. People improvise, click, and then don't know exactly how to handle the trade, which is irresponsible. You need everything to be clear. Everything need to be pretty clear. IPOs. I love IPOs. IPO. Do you trade IPOs?
Sometimes, but these are not my biggest friends.
Just for your knowledge. No. Spread is crap. Just let me show you something. Just for your personality, I think that IPO can be something that you actually, again, everything there is fast, but it's still the same rules. So, for example, you need to see clear, of course. Let me put what was the first day, because this one I was trading. I think I did even a second chance. I want to show you something on the. Let me take away the pre. The first day, I remember. Yeah. Look at this. This is the example of. Now, there are some rules on the IPOs, like usually some people wait for the first 5 minutes because you want to see the first 5 minutes because, for example, here, this is where, the stock started, okay? This is the first, 1 minute. But although IPO is just born, you still follow the rules. And that means, so in this IPO, let me zoom in so you can see it. This is the opening. So basically, ignore that it's an IPO. This is nothing, okay? Everything here is nothing, okay? So you have few minutes, and then you can actually even zoom in to see what's going on in 2 and even in 5. But then you can start to see something that, again, ignore that it's an IPO, but look at the formation. So this is how I look at things. So when I'm looking for formation, usually I look for 3 things. I need a clear entry, I need a clear stop, and I need a good risk reward. Meaning, if I'm getting here, and I'm not getting even to numbers, but you can see this is how much I'm risking. This is the first, the high of all time. So even if the stock will get around here and will be rejected, I can still almost double plus my risk. Okay, so this is, for example, a trade I did, and this is an IPO. I care less again about the volatility because, again, it was maybe like I remember like a 40-cent stop or whatever. And this is, again, as a fast thinker, the opportunities on IPOs, because this is on 2 minutes. So look about, I got here, 2, 2, 4, 6, and it's almost 3 points. Did here on almost risky, like almost 1 to 5. And again, if you watch it, the chart, you see the strengths, you see the volume, and you can tell yourself, higher, low, and then here you start to see spikes. So maybe somewhere around here, you can take some profit. And again, retracement. And as I was saying to you, raising your stop after the low, because maybe it's going to reverse into more. And when it's actually failed, get out, boom, out. So even on IPO, if you put it on, on a good trading plan, you can make a fortune sometimes, really. Next level. It is okay to be frustrated. It's okay to take a few minutes to rant. But now what are you going to do to get better? Will you turn that frustration into fuel to the work that will make you better trader? How you're going to answer will be seen in your future P&L. Mike Bellafiore. Because everything, I think, if it doesn't challenge you, it won't change you. And we need to crash our limited beliefs. Every Wednesday, 1 p.m. Eastern Time, we're going to have a 15-minute mentorship, which in each session we're going to develop a new topic in order to cause you to be a better trader. Thank you very much. See you next time. Bye-bye.